Thank you for joining us, Devin. Amit Jeswani is founder and CIO at Stallion Asset. He's joining us now to take some questions. Amit, good to have you with us here. Thanks very much for your time. How much cash are you sitting on, Amit? Or all normal at kind of regular kind of levels? Or is this a time you're sitting on a little bit more in terms of cash? What are you doing?
Prashant, good afternoon, and thank you so much for having me on your show. Our cash levels would be 2%, very normal. We're mostly 100% invested all the time. We mostly always have more opportunities than money. That's the case today as well.
Okay, all right. Hi, Amit. Good afternoon. Nigel on this side. I was looking at a Stallion Asset core fund. I think the AUM is more than 800 crores right now. And I think you're bracing for a 5th year anniversary. Rough, calculation suggests that you'll give returns of more than 25% net of fees. So pretty good going, but obviously the markets have been so good as well in the last 5 years or so. Of late, what have you all done? Have you added any new stock? If yes, with disclosures, could you tell us the rationale for that?
So, Nigel, just a disclosure, Stallion Asset, we're a SEBI-registered PMS and a research analyst firm. What I speak about today is they're not recommendations, and these are just for education purposes. Me, my family, my clients have vested interest in whatever I speak about. So, coming to what we've added this quarter, we're hyper-bullish on the consumer tech for next 1 year, but what we've added this quarter would be Angel One, the broking company that we've added the last quarter. That's the one stock that we've added. This quarter onwards, you start. So even in the bear market, most broking business gets very low P multiples because they are cyclicals, and in bad times the volume goes down. But that's not the number of trades. Even in bad times, that the 18-month bear market that we had from October 21 to March 23, the number of trades of Angel or any other brokerage never went down. Angel's market share has improved from 8% 2 years back to now 14%. They should come out with updates this tomorrow probably, and that should start showing 40-50% kind of growth. And here your cost is fixed. And if your revenues move up 40-50%, you'll massively see a J curve in profits. That's the theme. And there's one more play here, which is just no recommendations, of course, but even MCX has started with options 1.5, 2 years back. They, of course, have software problems going on, but that problem should finish by December quarter. The analyst suggests that last year's revenue that was around 500 crores for MCX can be next year's profit for MCX if options volume do what they are doing. So options is very new in MCX. 12,000 crores is the revenue of NSE, which is largely because of options. MCX is just getting started on the options side. So that is one. You need to keep a track, of course, of these things every quarter and make your adjustments in your expectations. But MCX this quarter should do 80-90 crores of option revenues. That is and your cost doesn't increase. So that is the game that we are playing in most of our stocks.
Question, Angel and actually just Angel, did you buy it for the first time in the last quarter, or you added to already existing positions?
So Prashant, we bought Angel first time at 350. We sold out at 1200 completely, around 1200 levels, and now we've entered again for the first time last quarter. We were very surprised by the number of trades moving higher even in bear markets. Dinesh Thakkar would always say that options volumes don't get impacted even in a bear market because people are just playing for a few points here, like 2% up and down. And that was the case when a bear market struck. The options volume, the number of trades, because here you're getting 20 rupees per trade. So the number of trades don't get impacted. And we love companies which are gaining market share every quarter, and that's happening in Angel very aggressive.
Have you lightened any positions? Because that's where the trick is, right? When do you get off? As you said, on Angel One itself, you all got in early, but you all got off early as well, and you'll have re-entered at a later date. So picking a good stock is good, but even you need to time your exit. So have you lightened positions in anyone with due disclosures?
We've sold some Titan. We've sold HDFC Bank last quarter. HDFC Bank is now about 1% or probably less than 1% weight in our portfolio. HDFC Bank is growing at 15% pro forma. Like day before yesterday's update was also pro forma growth of 15.2%. Nigel, India's entire loan market, the banks that have given loans is about 136 lakh crores. That is up to March 23. The total loans that Indian banks had given was 136 lakh crores. Out of that, if you see yesterday's update of HDFC Bank, HDFC Bank was about 23.5 lakh crores. So HDFC Bank is 17% of India's total lending market already, and we don't see massive market share gains anymore, plus minus 2%. See, India's nominal GDP is growing at 14%. For us to bet on a lending business, which is leveraged at 8 times, you need to grow at least 20, 25, 30%. Like Bajaj Finance, we still hold in the portfolio. We're very happy with 33% AUM growth. You're growing 2 times the credit industry, 2 times the nominal GDP growth, and that makes us hold a leveraged positions, or else for 15% growth, we have better options available.
Okay, got that. Amit, hi. I'm going to come back to the theme of the moment, and that is this sporting bonanza that's kicking off today, right? The World Cup. So the talking point today has been this Bank of Baroda report where the economists at the bank said that this event could add about, I think, $2.6 billion to the Indian economy. I don't know if you share that kind of enthusiasm or not, but tell us, are you expecting a spending spree? Because there's World Cup and the festive season, I mean, they're coinciding. And if you are expecting, you know, a deluge of higher spends, then how would you look to play this consumer boom?
So we typically don't play for one quarter. That's a very small, we can't make investments based on World Cups. But we have some consumer electronic names. We have even the delivery trade, which is there, like Zomato, we have in our portfolio. No recommendations, of course. Yes, and these are players. We have one electronic retailer in Bihar, which is scaling up very well, which is growing at 30-40%. This quarter might be a little weak at 25-30% for them, but post this quarter, I expect growth to be 40% plus for them for at least next 3-4 quarters. That electronic retailer, which I'm speaking about, is Aditya Vision. It's a very small company, so I don't want to speak much about it. Yes, it does ROEs of 50%, grows at 40%, 30%, quarter over quarter, consumer-facing companies. Those are the kind of companies you want to be in. In consumers, you want high growth. And once we get that, we bet aggressively. But to your question on World Cup, only place, we don't have such stocks, but we've not that's not part of a thesis, at least now.
No, but fair enough. I think the kind of names and the sort of stocks you mentioned, I think they more than cover you to play the little bit that we'll have perhaps over the next month and a half. Rima.
Amit, out of time, but thank you very much for your time, and enjoy the World Cup. We'll keep chatting with you. The big event that